Hello, everybody. Kirk Spano reporting to you from Euphoria Land. Stock market is going to the moon. And yeah, it's very interesting because somebody predicted it. At the start of the year, we all put out our look forwards, our forward-looking forecasts. And I had the second highest forecast for the S&P 500 in 2024. If you take a look at the comments, boy, did a few people lay into me. But I never moderate my content or my comments on my content. So you get the entertainment value of people telling me that no way was the stock market going to go up in 2024 and that it was going to crash. So anyway, I said, how euphoric can the market get in 2024? I think the S&P 500 would reach 5720 on its way to 6,000 in the first half of 2025. Well, interestingly, we're at 6,000 right this minute. Actually, a couple of minutes ago. Yeah, back under 6,000. But we're right at 6,000 right now. So, in my opinion, we are 1 to 2 quarters ahead of schedule. I think a lot of front loading happened before the election. I think a lot of front loading is happening now, which means back end might be questionable. So let's talk about where the market stands. We did a macro call last week, so you should listen to that one that had Shooter and Teresa on it. I thought it was a good call, and I do encourage you to go to the YouTube channel and listen. So I put out a stocks of the week at both websites, same article. As long as you're a subscriber, you can see it. If you are a swing trader, you belong over here at Fundamental Trends. If you're not a swing trader and you're looking more long-term, especially if you're looking for income generation and retirement, margin of safety is the way to go. Now, I wanted to talk about what the valuations are in the market briefly before I got into these stocks of the week. So according to FactSet, about 75% of the S&P 500 has reported now, and the blended year-over-year earnings per share growth, has been 5.3%, which is the fifth quarter of earnings growth after a couple of years that went sideways. Okay, so we had a lull in earnings for about 2 years during 2021 and a half, middle of 2021 to the middle of 2023, really. And now earnings have started to grow. Part of that is cyclical, but part of it, I think, is actually secular from AI and machine learning adoption. Now, that is going to be not a smooth line. That is going to be more like a step up. So as all the companies adopt AI and they upgrade their factories, if they have factories, or they change how their banks do business, or they change how they develop drugs, whatever the case might be, whether they actually have a robot doing something or they're just using a computer system with AI to figure things out for them way faster than they could ever figure them out before. The adoption of AI and machine learning over the next 5 years or so is going to be monumental for corporate earnings. Now, people always talk about, but what if we lose our jobs? I don't think that's going to happen. I just think a lot of people, millions, when I say a lot, I mean millions of people, are going to have to change what they do for a living. I think young people in particular, as much as everybody just wants to sit in front of a computer and waste their day, I don't know anybody who does that, do-it-yourself investors. I think that a lot of young people, I'd say even some of the millennials at this point, but mainly the Gen Zers, really ought to be looking at healthcare opportunities for employment. I think nurses, I think LPNs, nurses assistants, technicians, physicians assistants, and doctors, of course. We have a shortage of all of those things, and they're all projecting out to be worse in the next 10 to 15 years. So if you have a junior high kid or all the way up to college, you ought to be making them think about medicine, because the shortage that we have developing for medical personnel is off the charts, literally off the charts. For every 5 people in healthcare retiring, only 2 are entering healthcare professions. Anybody getting into nursing, you're going to make 6 figures, have great benefits. I think that if you are willing to get into nursing at really any level, you are going to have job security for your entire life. So if you can convince a kid to get into nursing or even become a lab technician of some sort, because we're short on them too, tell you what, I mean, you never have to worry about a recession. You just don't. With the aging population, it's going to be, I think, maybe the best place to get ahead. And in fact, I'm starting to go after some of those clients again. I don't really chase clients, but I'm thinking that I probably reach out a little bit more on money management here over the next 3 or 4 years, because I think a lot of people are discombobulated. And something that I know is that when the market gets turbulent, people move their money to a different advisor who didn't tell them it was going to get turbulent. So here I am to tell you today, the market is going to get turbulent. Indexers are going to be in big trouble because we're probably going to see the index spike, crash, make a W shape over the next 5, 6, 7, 8 years. And so indexers, if they eke out low single-digit returns over the next 5, 6, 7, 8 years, I think that will be pretty good. I think that stock pickers and people who are willing to make tactical shifts in their portfolio, and I don't mean the day traders or the swing traders. If you want to put the time into that and get good at that, more power to you. Shooter and Teresa are awesome. I don't do a lot of it, even though when I do it, it tends to work out, more often than not. But I think that people who are willing to make tactical shifts in your portfolio are going to do really well. What are tactical shifts? Slight changes in asset allocation a few times a year. Selling stocks that have a parabolic up curve. And maybe you don't sell the whole position, right? You trim it into the parabolic up move. You sell some covered calls, which we'll talk about today. And then when you find a company that you really like, but the market doesn't believe in it, well, if the market doesn't believe in it, that means you're going to get a lot of choppiness, some short attacks, and you get these opportunities to buy real cheap when the traders are being traders and they give you a chance to buy real cheap. We have a stock today that I'm going to talk about that I think is just getting off the mat. And if the earnings call tomorrow goes well, you could see the stock double or triple by New Year's, give or take. So what am I talking about with valuations? Well, here is the forward 12-month PE ratio according to FactSet. Take a look at .com crash. Take a look at now. Take a look at after the COVID bump, right, from the bailouts. It's very likely that this tops out in here somewhere and then corrects again, because this and the Great Depression and this were the 3 highest points in history, and we're about to make it a 4th time. If we push the PE ratio even higher, that would be borderline suicidal for investors. So here we go, getting to the danger zone on forward valuations. Now, the one thing that could happen here is that the stock market could miss on the earnings part of that forward valuation. But I just said that I thought earnings were going to do well. Well, they will, but a lot of other people think that too, to the point where the forward earnings growth rate from analysts is projected to be 14% over the next year. That is huge. A 14% earnings growth rate over the next year? I mean, that is really, really aggressive. What if it only comes in at 12 or 11? Will the market be happy about that? Probably not. So if the $274 earnings forecast for the S&P 500 comes in at, say, 260, 265, then probably the price to earnings ratio contracts and the stock market falls. Here is the average of 4 different valuation metrics tracked by advisor perspectives. I really like the Crestmont PE, 187% of what it would normally be. On average, the 4 of them are 159% above the mean. First standard deviation, not a big deal. Second standard deviation, kind of a big deal, but not every time. Third standard deviation, well, it's only happened a couple other times, and probably we got a problem here, Houston. I don't know when, sometime in the next 6 months, I would say, that we're going to get a correction. Now, will it be a run-of-the-mill bear market like we had in 2022? That's actually my guess. I don't think that we get the crash yet, unless we kick off the trade wars fast and hard. If we kick off trade wars fast and hard, then Katie barred the door. Who knows what'll happen? But what I think we probably need is for this to come down into here, and that would be very typical of kind of what I would call a run-of-the-mill recession or a run-of-the-mill stock market correction without a recession. Because as you know, I think there's a building boom just starting. What could stop that building boom? What could stop that building boom? What could stop the building boom is if for some reason we get resurgent inflation concerns and the Fed stops lowering rates and the long end of the curve goes up. Now, if the long end of the curve goes up, which it has been, and the dollar is spiking right now, which usually means asset prices go down, then that means that maybe you don't see new home construction. And maybe these deals that I see getting put together right now to start building in Q1 and 2 and 3 end up not actually putting shovels in the ground. What if these deals get nixed for some financial reason? We have to keep an eye on that. If the deals being put together now to engage in construction and development and redevelopment in 2025 actually don't come off and we get a recessionary signal, we're in big trouble. So it is vitally important that we do not see the long end of the curve go up and the short end of the curve stopping going down. And if somehow the short end of the curve goes up more than the long end, right? They just came out of inversion. If the yield curve gets inverted again, this is in a very, very, very dangerous spot. So I know that half the folks out there are, yay, Trump and Musk are running the country. Whatever, I don't care. I just don't care. As I've gotten older, I have realized it's just about the money. Mick Jagger once said the reason the Stones still tour is because they like it, but also because the money they make is kind of like keeping score with the other musicians. A competition clearly that Taylor Swift has won. However, we are likely to see the money change direction if the politics get out of hand. That's the reason we have to keep track of politics. I've talked about the bubble in professional sports, and I've looked at my own evolution here and how I think about sports, how I think about politics, how I think about health, how I think about life. Maybe this comes from reading the Dalai Lama's version of the middle way. However, what do the young people say? I'm over it. I'm just over it. I'm over the sports. I still want to see the Bucks and the Brewers and the Packers win. And I was tuning into the Jets just to see what Rodgers had left in the tank because it was a curiosity to me. But I didn't watch any football yesterday. Zero. Why? The Packers are on a bye week. I worked and I played. And I think that we are at peak something. I'm not sure what it is. Peak bro, maybe? Going into peak Amazon and peak Costco and peak DeFi. I don't know. I think we're at a lot of peaks. And I think that when that happens, when things get euphoric, which is what I forecast would happen at some point this year, going into next year, then you're setting up for a pretty deep correction. And we'll see what happens there. We'll see what happens. But this chart is important that I'm showing you. Valuations really just don't have anywhere higher to go. Therefore, earnings have to go up. And if they don't go up as much as projected, the market's not going to like that at all. Not at all. So I think that the large caps are really getting into trouble. I'll show you that in a second. I think the small and mid cap space, the Russell 2000, we know that half of those companies are not profitable and never will be. A handful of the unprofitable companies will become profitable, and that's where your biggest money is made. If you can find the small and mid caps that actually are going to make it to profitability, the companies that the market doesn't respect or doesn't know about or just doesn't value, those are the companies that are going to make you literally life-changing money. So the two things that I want to help you with, that I want to help myself with, are how do I protect myself knowing what we know about this, right? And I've been good at this, right? I told you to sell at COVID. I told you to sell, for those of you who are around, I told you to sell the .com. I told you to sell the real estate bust. And even though this didn't show up, this is why a lot of people got head faked, because this wasn't really out of line. But I knew real estate. I've told you about the conversation I had on the boat with one of my friends, right? We were on a boat in like August of 2016, his boat on his lake. And I said, how's the real estate market? And I was curious about this because one of my friends was a mortgage broker, and he was, let's say, amoral with who he helps get mortgages. And I said, what about real estate? He goes, it's peaking. I go, how do you know that? He goes, because I tried to sell a couple of my properties and I had a hard time doing it. And at some point, he lost like 10 properties. This is already by summer of 2016. Excuse me, 2006. I correct that, 2006. By 2008, you know what happened. So we can see things from the symptoms, from the conditions, from the signals a year or two or three or four ahead of time. The problem is, of course, what? The market can remain irrational longer than a short can remain solvent. So shorting the market is really hard. But I've been pretty successful of just getting out of the way of the big stinkers. Told you to sell almost everything at the end of 2021. Told you to sell almost everything right before COVID. I was one of the first people to tweet about COVID. I tweeted about it in January of 2020, like January 20th. Go check my Twitter X feed. What I'm telling you is this is not as easy as it seems today. Just because, and somebody mentioned this in the chat here, you know, we're having fun looking at all the crooked green numbers for our portfolio because it's going up so much. Well, we got into small and mid caps a little bit early. We got into Bitcoin a little bit early, and now we're reaping the benefits. Rocket Lab, AST Space Mobile, Bitcoin, Palantir, NVIDIA. You know, go down the list of the winners that we've had. And they're not perfect. 25% of my stocks did not make money. About a dozen of them got their ass kicked. But for the most part, we've done pretty well. And selling options, selling covered calls, selling a lot of cash secured puts, right? We sold more cash secured puts because we're trying to get into great stocks, not get out of them, right? That's always been my beef with covered calls, even though I'm going to tell you to sell more of them today. My beef with covered calls is that you end up getting off your winners too early. And that's why you have to respect the technical analysis. So let's get to that, all right? Actually, one more thing, Costco. I'm just going to use Costco as an example of a stock that is grotesquely overvalued. A stock that can come down 30 to 50% easily. If you own Costco and you're not trimming it right now, please stand up, put something pointy on your seat, and then sit down, all right? Because you need to be trimming Costco. I don't care if you have to pay some tax. Anytime that the risk is greater than a 20% loss, it is worth your time to trim the stock, right? And especially if you have any carryover losses from something. Costco's forward PE is 52. Its price to earnings to growth ratio forward is over 5. What is it supposed to be? Around 2 on a blue chip. So this is actually saying that in a recession, Costco could lose 2/3 of its value. And you have to understand how Costco is valued, right? There's just a cult thing around it right now, and it's a momentum stock. And so it's just riding up because people keep betting on it. But what happens if interest rates go up and the value of their real estate, which is around $30 billion, goes down? Here's a stock that has a market cap of $418 billion with about $30 billion of real estate. So that means that nearly $400 billion of that market cap is based on sales. I go to Costco. I actually love Costco. I'm like millions of people in this country that kind of treat Costco like a date, right? You make your 2 loops around the store because you forgot something the first loop. Oh, I forgot to get the little chicken. Oh, I forgot to get the bag of salad, the bag of Caesar salad, right? There is no way that this kind of a stock should be doing this. It is not a high growth stock. The growth rate is right around 10%. Forward growth 12, right? It's growing all right. I mean, pretty good for a blue chip, but price to earnings ratio divided by the growth rate is supposed to be around 2 on a blue chip, around 1 on a smaller growth company. The stock can drop 30 to 50% easy, and in a recession, it can drop more. There's a lot of stories like Costco out there. Now, you don't even have to know that much about it. If you just use the weekly technicals, as I've shown you how to do them, and you take a look at the Russell 1000, which is the S&P 500 plus the next 500 biggest stocks, and you take a look at the relative strength index measured every Friday, right? You're not measuring it every day. You're not measuring it every hour, not every 4 hours. You're not a trader. You just want to know what the longer term trends are. Longer term trends are this. There's a lot of stocks that are grotesquely overvalued. We don't own many of these. Even Gilead, which I talked about a year ago, is suddenly overvalued, overbought. I don't know that it's overvalued. Overvalued and overbought are different. A lot of times they coincide because things get overbought to the point of being overvalued. But just look at all these RSIs well over 70, which is kind of when you start to think, ooh, gotta pay closer attention. Apollo, the private equity companies, I told you that they were getting overvalued. What happens if their private credit deals start to go south if the economy stops growing at 3%, which is what it's been doing for a few years? What if growth really doesn't improve in the next few years relative to what it did in the last few years? Killing the IRA could do that. And even though it seems like the only part of the IRA that's in danger is windmills, maybe EVs. I think there's going to be an EV credit. It's just going to change how it's paid out. Something that's good for Tesla, I'm sure. You take a look at all these companies way over 70. Wyndham Hotels, I got out of Park Hotels because after being in a whole bunch of hotels here again since May and recently, I'm just not impressed. It's going to be hard for them to make money, especially if we get an economic disappointment, whether it's a slowdown or just not as much growth as people expect. Look at all these stocks over 70, right? That's where this comes from. It's where that comes from. Just scrolling and 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 scrolling. So the ones that say sell, that means the oscillator under oscillator, right? This is the tech trend and the moving average. So these are kind of momentum. This is the change in the rates of various indicators, the oscillator. When these hit sell, that means that these are going to follow. So you go up here, and all kinds of these have switched from buy to neutral. That's what's happening. Yeah, the buys were strong buys, not anymore. Not seeing any strong buys in here, are you? Sells are starting to pop up. Lots of neutrals. More and more and more and more. Now let's change this to a monthly reading. Why 3 months? Because it's 3 months, a quarter. Look at all of these that are overbought. A 99? Freaking never seen 99s. Look at all these overbought stocks. It is euphoric to the point of irrationality. Remember, it can remain irrational for a little while, bounce around in irrational until there's an event like a bombing or a trade war or something. This is unbelievable. Just look how much I'm scrolling and seeing the overbought. Does this resonate with you? Does this resonate with you? So there are a lot of stock. I basically just told you to trim Costco or sell it outright. There are a lot of stocks that you should be trimming. I think I just saw Palantir. Here, Palantir, an 86. Well, let's take a look at Palantir. So what's interesting to me is, remember, we bought Palantir under 10. And I've been selling it. Well, I'm out of it now, but I sold it between 30 and 40. Yeah. It's up to 60. I'm an idiot because I didn't get the last 50, even double. Let's say I sold it all at 30. I didn't, but I missed the last double, but I tripled my money. So people who are up since I sold it are telling me that I'm wrong because of what just happened. But I say, I bought it at 9. Doesn't matter. You missed this last move. Okay, what's the next move? Elliott Wave says down. Resistance is way down here. Resistance becomes support. Way down here in the middle to upper 20s. Palantir could easily lose 50%. What if the rest of the world tells Palantir to go F themselves, Z themselves? What if the rest of the world just says, you know what, go zuck yourself, Palantir. We don't like Trump. You're connected to Trump and Musk and Thiel. We don't trust you. And the AI from your competitors is catching up fast. We'll slow walk it. We'll buy it from somebody else. Do you not think that corporate executives and governments can do that? They don't have to rush over to buy Palantir stuff. So while they might get a little bit more from the U.S. government, and I don't know if there's much more for them to get, what happens if their market goes from global to just mainly domestic? I'm not saying that's going to happen, but look at this curve, right? Remember, we were buying it down in here, looking for this. Should not be chasing this. It's right at a resistance level right now. Somebody on the YouTube page said, I missed $15,000 of gains, meow, because I wrote some covered calls. Well, you don't know that. Covered calls haven't expired yet. And isn't it a good problem to have that you get called way closer to the top than the bottom, than having a stock go down on you? So what would I be doing right now? I would be looking at all the stocks that I own and checking that weekly RSI. If you don't have TradingView, shame on you. You should have it by now. I will put the link in there. You get a discount for using this. There, it's in the chat now. If you don't have TradingView, all I can say is shame on you. This screener is the best one that I've ever used for this price. There are better screeners that are about at a zero in price. 20, 30 bucks a month. If you're managing your own money and you don't have this, shame on you. You have to respect the technicals as much as you respect the valuations and the growth rate. So you should be finding lots of things to trim, to take some profits on between now and I'd say January. And you can manage the tax calendar a little bit. I like selling covered calls to January. I think that's a great way to play this. You get over the calendar hump, you collect some premium. If it gets called away, you're probably really close to the top on a lot of stuff. Pretty easy with these RSIs to buy a little bit lower. And you don't have to try to be perfect. Here's something I really want you to wrap your head around. We'll continue to use Palantir as an example. And let's just shorten this up a little bit. All right, take a look at Palantir. We know RSI is off the charts. This one, which is a Wyckoff signal, these green bars are usually spots to sell. Let's see. Green bar came down. Green bar, it came down before the green bar there. But normally the green bars are signals to sell. If a stock, and if you do this, you'll see that like 90% of the time it's true. So the fact that it got a green bar, which basically says high volume overbought, maximum buying pressure, the fact that it blew through two of these on the way up just means that there's something weird going on. There's a lot of FOMO here, a lot of memeability from millennials piling into this one. A lot of people letting their ideology tell them what to buy. I've seen this before multiple times in 3 decades. The pattern of letting your politics play into your investing is very bad for you. Now, if it was all about politics for me, would I have bought Bitcoin? Would I have bought the energy stocks again? Would I have bought a Trump bank, right? I mean, Mnuchin, very tied to Trump. I had all kinds of Trump trades on because it's just about making the money to me. And then if I want to do something good with it, which I do, I'll do that. I've got a feeling sometime this decade, there'll be a recession or two, and it'll be stagflationary, or they'll be stagflationary, is my guess. Maybe the first one is stagflationary, and the second one is more standard as everything goes down. I'm guessing I'm buying a lot of beer again. Back in 2008, I paid for my whole baseball team just about to play baseball with me. They didn't have the $200 to play. And I was buying drinks and burgers, 15 Sundays over the summer. I don't want to say that's coming again, but I worry about it. It has more to do with the demographics and 40 years of not planning, 45 years of not planning than anything else. I'm writing an article about how I think Trump can be a great president, what he has to do to make that happen. I don't think I'll be the only one saying it, what I'm going to say. And I think there will be some people telling him. Now, the question is, who can appeal to him the most? What semi-honest voice is going to convince him not to govern to his rhetoric and to minimalize things? I just said on Twitter to somebody who's got 1 million followers, I said, look, I think Trump can be a great president if he doesn't start any trade wars, and if he focuses on pushing back on China in a way that they stop selling the precursor drugs to Mexico, and he goes after the drug supply at the precursor level, right? The chemicals that make the drugs. And then he somehow works something out with Mexico to crush those cartels. It'll require the president of Mexico saying, yeah, send some people in to kill some people, because that's what's going to happen. We cannot get rid of the drug problem in America unless we destroy the cartels. And we can do it, but we have to be invited to do it. The Mexican president has to say, send your mean dudes that move in the shadows. Or the drug problem doesn't go away. And you can bitch and moan about the Democrats this or Republicans that, but unless the cartels are destroyed and China is held accountable for selling the precursor drugs to the cartels, ain't gonna matter. I remember Just Say No. Well, it should be just kill the cartels. Hopefully I don't get popular enough that anybody in a cartel hears this. For the record, I live in Florida. Any case, Palantir Technologies, there's nothing about the fundamentals of the company to make that a good investment. 5-year growth rate, 25%. That's great. Let's look at the valuation. Forward PE, 154. Forward PEG, 6, right? But it's Palantir to the moon. Okay, history doesn't matter at all. Very easy for Palantir to lose 50%. Very, very easy. How many of you remember 2.5 years ago, and I guess it's almost 3 years now. It's about 3 years. I have to check on the YouTube page. About 3 years ago, what did I say about Tesla? That it would lose 50% of its value from that peak at the end of 2021. Let's use this one. Right in here, I was telling you, going to lose 50%. So from 400-ish into the middle 100s, and for a hot minute, the low 100. Lost over 50%. Now, chopped along, which probably was healthy and probably should have kept happening. And now it's rallying up again. You got all the bros out there talking about to the moon. Oh, they better sell a lot more cars, and they better get autonomy this decade, and they better not have any competition on cabs, and they better not have any competition on robots, and they better not have any competition on AI. Wait. No competition on robots, AI, autonomy, or robotaxis? Oh, yeah, sure, that'll happen. Nobody's going to compete with Tesla. They're just going to have most of the market. Meanwhile, I drove a Waymo in San Francisco, and the cost of my AI today, which is better than the one I had 4 years ago, is 99% cheaper. Think about these things. All right. I want you to sell a cash secured put if you don't have a full position on New Fortress Energy. Natural gas prices are going up. Europe's stockpile is weak. They probably get lucky with a warm summer, a warm winter, and then summer is hot again. Even though they don't use air conditioning the way we do, it is tough to think that natural gas prices aren't going up. And the potential event is that there's more war in the Middle East. Remember, Iran has tried to kill President Trump. They've put out the order. He's not happy about that. Remember when everybody said that George W. Bush attacked Iraq, even though we all knew they didn't have really anything to do with 9/11? Why? There are a couple reasons. One, it was to destabilize the Middle East so that there was no wall between Iran and Saudi Arabia and let them fight with each other rather than us protecting them with a dictator in between. Right? There was all kinds of geopolitics on why we got rid of Saddam. 9/11 wasn't one of the reasons. It was just an excuse. What if Israel decides the way to get Iran to not fund Hamas, Hezbollah, the Houthis, other groups, is to get rid of their money spigot? That's oil and gas. China gets natural gas from Iran and Russia, but Iran in particular. What if Israel bombs the weapons factories, the refineries, and the pipelines in Iran? It's a whole lot of pressure on a whole lot of people, and we don't have to do it. We've already sent the defense system to protect other Middle Eastern countries from a counterattack. I'm not saying it will happen. I'm saying the odds are higher than normal, though. So natural gas probably goes up in price no matter what, but it could go up a lot. Those are the types of equations you look for. Win or win a lot. That's a great equation. Usually it's break even or win you're looking for, but every now and then you find win or win a lot. And a win or win a lot is really good. Really like that one. So sell the January $9 cash secured puts on New Fortress Energy. You'll get well over $1. It looks like about $1.25. Ask for the ask. And then with about a half an hour left in the trading day, go ahead and lower your order if it doesn't hit. The stock's done going down. I mean, it's choppy. So if one day down bothers you, but if you just look at the last 3 months, right? 2 months. So from here, September to November, same spot. Horizontal array. See, choppy, the same spot. Probably bottomed right here. So if you sell those $9 puts and it happens to get assigned to you because it's in the 8s, you'd have a net price below 8, which is pretty much at the 52-week low. So if it double bottoms, so be it. But if you don't have a full position in New Fortress Energy, work your way in that direction. They refinanced all their debt out to 2029. By 2027, they'll be selling more natural gas in Mexico because they're building a second plant. They have orders for ships for their fast technology, right? It's modular. They build it up to the size that companies need. But yes, I am working to a full position on New Fortress Energy because there's almost no downside and there might be a lot of upside, right? They have no debt to pay until 2029. What can happen to them? They either chop along or they take off to the upside, especially if natural gas prices go up like I expect in the next 2-3 years. And don't minimize the impact of climate change. I know that from a political standpoint, people want to say, climate change. If you haven't wrapped your head around the idea that it's happening, again, I don't care why you think it's happening. You have to at least understand that it's happening because every single measurement says that it's happening. Go ahead and argue about whether it's sunspots or volcanoes or us burning fossil fuels. I don't care, but it's happening. The reason it's happening is less important to the investor than it is to the politician. But just recognizing that climate change is happening means that certain things are going to occur over the next 5-10 years. A shift to clean energy, and I will feature that next week, I think. But natural gas taking over for coal and even for oil at some level, and in plastics. I've talked about New Light Energy for about a decade now, right? A refinery bought them out of their capacity, so they wouldn't put it on the broader market. That contract's almost up. There's technology out there to replace petroleum-based plastics from carbon capture. So carbon capture out of the air is going to be able to create plastic. The technology exists. The manufacturing processes have been coming down in price. And it's not just New Light anymore. There's several. Carbon capture is a big deal. It doesn't just impact, oh, look, we're taking carbon out of the air. No, it replaces the use of oil because we can turn it. We can turn the carbon from the air into plastic. We just have to stop throwing it in the ocean. Buy New Fortress Energy. All right, we'll finish with Ametis. Ametis is starting to move. It was up 10% earlier today. These are my price target. I think it's in the teens sometime next year. I think it's in the 40s by 2026. And I think it's 50s or higher by 2027. How can I say that? Because the LCFS credits got passed on Friday. The price of the credits that they've been banking is going up dramatically. They're up like 40% off their bottom in the last 4 or 5 months, whatever it is. There is really nothing for the Trump administration to wreck for them. There just isn't. Because you have to remember, the Congress people that are benefiting from the IRA the most are actually in the red states and in the swing states. And by the way, did anybody notice what Gavin Newsom said over the weekend? He said he's going to withhold California's tax payment to the federal government to make sure that California doesn't get screwed in the next couple of years. They're going to slow pay the federal government. And then if the federal government screws them in the next few years, they're going to sue and try to keep the money. Can't imagine that happens, but that's not really the goal. What is the actual goal? What is the goal to slow paying the federal government and get into a lawsuit with them if they don't like what Trump does? What's the real goal? Think strategically. Delay. Yeah, Marker, man, you're all over this stuff. I learned so much from you. So California is working real hard to fortify everything there. And they're telling the federal government, hey, be careful what you do. Because not only if you piss us off, you lose money and you deal with lawsuits and you muck up your whole project. Find a way to govern away from your rhetoric. Move to the center. Yeah, Trump put strategy, absolutely. Ametis has several things happening here. And if you are not planning to listen to the earnings call tomorrow, I encourage you to do it either live or on the recording. They have airlines lining up to help them with the SAF plant. There is a lot of money left in the IRA that the federal government can distribute by January 20th. Remember, Ametis already got, what were the credits for the EB5? 200 million? I think 200 million. It's enough to build the plant. But there's other grants and loans that the federal government can administer because they have the money sitting there. I guarantee that the federal government under Biden by January 19th is going to issue a lot of checks to use up the money in the IRA, all the grant money, all the loan money. They're going to get as much of it out the door as they can. And there's a chance that Ametis gets some of it. I don't know if they will. But in order to have SAF, the plants have to get built. They already gave money to a shit company like Gevo, who really is a shit company. So they have that. The IPO in India will happen at some point. Oh, the new Indian contracts, they might announce tomorrow. I would imagine they have those in hand. I haven't seen a release. So they already got the LCFS finally approved in California. And a couple people pointed out besides me that just took forever. And it did. They played politics with it. There's no doubt about it. They waited till after the federal election. I think legitimately they weren't ready 2 years ago, even though that's what we all hoped. And then as they got to election season, they had to put it off until after the election. That's what they do. But in the end, Ametis got exactly what's good for it. All the RNG in the Central Valley that's getting built out, only gets tax credits if it's built before 2029. Aemetis has got the pipeline. They almost are going to have a monopoly on dairy digesters in the Central Valley. Now, at some point, state of California is going to give in to some of the protesters about the dairy farms. But it's not going to be getting rid of digesters. That's dumb. You know what it's going to be? Nobody can add more cows. That's going to be the regulation. No more new cows. There's going to be a cow cap. Oh, I don't know where the cows are going to go, but they've got a pretty strong union. You see how the milk has gotten more expensive. So a lot of things going in Aemetis' direction. I know that there's fear about what Trump might do, but really, when you take a look at the IRA and everything else that's out there, the thing that's most vulnerable in the IRA are tax credits for windmills. And if Biden's tactical, and I think he is when he's awake, come on, you got to make the joke when you have a chance to make the joke. I teed myself up. If Biden's tactical after his nap, come on, he's going to leave the windmill credits unallocated so that Trump can take the win and get rid of them. Take the wind and get rid of them. I must be hungry, getting jumpy, getting punchy. The Republicans don't want to get rid of the IRA, folks. They just want some PR victories, because if they cause jobs in their states to go away, then the politicians lose their job. And at this point, everybody knows the economy is pretty strong. It's not great, but it's good. And if people start losing jobs 6 months or a year after Trump takes office, he's not going to be able to avoid the blame, at least from enough people to swing the next election away from J.D. Vance. Maybe Trump doesn't care. The only thing I truly worry about Donald Trump at this point is that he's the Joker from the Batman movie. Some people just want to see the world burn. I don't think that's him. I think Donald Trump wants validation. I think Donald Trump is going to think about his legacy. I think he wants to be remembered for being great. Look at Ronald Reagan. If you really study Ronald Reagan's record, he was not great. However, there's a portion of the population who have a religious fervor about him being great, even though none of the evidence really supports it. He was good for a while. And then, really, all the criticisms of Biden surely should have applied to Reagan at the end of his term. He was sleepy and had Alzheimer's. I don't think Biden has Alzheimer's, but clearly Sleepy Joe was a good nickname. But I need more naps too, and I'm only 54. So buy Aemetis. If you don't have a full position, you have an hour and a half to get there. If I'm right, there's at least a 50-50 chance that Aemetis surges. And if you're taking a look at the volume today, they're already over 1 million shares above the average daily volume, right? Average daily volume is 541,000. Okay, so they're 500,000 above average daily volume with an hour and a half to go. So double the daily volume. Most of that actually happened early in the day. But the stock hasn't come off really too much. Had a high of 370 today, a low of 335. It's right in the middle of 355 right now. Can things get delayed? Sure. If they do, remember this phrase to finish. Charlie Munger said, what? Money is made in the what? Anybody know this one? I think you do. Money is made in the waiting, right? Patience, folks, on the ones that haven't gone up yet, and the ones that you can lock in some profits. Figure out what makes sense for your portfolio and your risk tolerance. I just showed you how 2 great companies could lose 50% easy. Manage your risk. And remember, our small growth companies are not like the rest of the IWM. Our companies have multiple ways to win, which is what we talked about the other day. Remember my bowling analogy? You're not trying to hit one board. You're trying to find 3 or 4 boards that give you the strike. All of our stocks, every single one, has multiple ways to win, including, in most cases, M&A, mergers and acquisition. Half of our stocks are takeover target. All right, have a good day. I am going to go have some of my pulled pork for lunch. Very happy with myself. All right, take care.